What up, traders? What up, investors? We got a fantastic little post today. This is from Eddie. He posted his positions within the Wallstreetbets, basically saying in tech we trust, bull gang, with the bull church and prayer, hoping for a great return. It's kind of funny because this is actually one of the more intelligent, less crazy risky bets that we've seen here in a while. Again, because you can just look here at his overall position, which I think, again, I don't know how this trading platform works, but it looks like this is how many shares he has. So he has 140 shares of Apple at $23 as cost basis, and of course that's going to be a huge return. Again, the stock is well over 300, and you see that the overall price or the earning or the percentage gain from that is well over 1,200%. And then you kind of see going down the list, owns quite a bit of Tesla. Cost basis around $260. Of course, that's a really nice return is there as well. Again, kind of slowly go down the list. Looks like a couple of these that he just recently bought, like the Disney could be a recently bought. The BA is most likely a recently bought. JP Morgan, Starbucks, things like that. These could have been more recently bought options or stocks, but looking forth this crazy, fantastic return of just the power of just holding Apple for quite some time. We're going to be looking at the charts here in a second. I kind of wanted to pan over here, so I kind of made it just a very quick spreadsheet here via Google Sheets, and looking at basically the amount of shares, the cost basis, the value of those shares when he bought them, or the cost basis, and then the overall returns with the current prices there, which was Friday of the close. So basically, initial investments was around a little over $18,000, and then current market price as of the close of Friday was around $70,000 or $69,249.95. That's basically a return of, where did it go? Let's see, go back. A return of about 377% on his capital. Again, those Apple's shares he's been holding for quite some time. Everything else could have been within the last year or two, potentially, but with Apple, been holding it since 23, probably due to the reverse stock split, and that's just been a super long-term hold for that individual, basically being his super largest position by far, of being $43,000 out of his initial $70,000. So we're talking well over 55% of his portfolio is within Apple. So what we're going to do now is going to switch to the charts. We're going to be looking at any potential opportunities, doing some of the technical analysis that I follow within the charts, and then we'll see if there's any trades available or trading ideas for you folks out there. Again, I want to give a big round of applause for This Is Eddie. Really good fortitude on holding those Apple or not options. I keep on saying options because I'm so used to saying it in Wallstreetbets. Holding that stock for quite some time and just letting it compound year after year and getting that dividend and seeing that growth really fruition to a beautiful return for you there, my friend. Alright, so first and foremost, we're just going to be diving into Apple. This is, again, the largest position that this particular user has. And then I think I'm going to call him Eddie. So Eddie is going to have basically a lot of his net worth in Apple stock. He's been holding it for quite some time. We'll look at the monthly chart here. And again, I think the price was around $23, so that is going all the way. Lack of a better words, he's been holding it since the financial crisis, basically in 2009 to 2010 potentially. One of the first time it printed at $23, and again been holding it then. And then once their dividend kind of came in 2012, he's been collecting a nice dividend for sure. Then seeing that stock split in 14. And then just basically just holding it for a super long time and getting that beautiful nearly, was it 1,200% return plus on this particular stock. Looking at it today, its current price and momentum, it has been doing fantastic compared to the overall market. It's well above its 200 exponential moving average. Never really kind of went down as much as a lot of other companies, because again, even though China being their biggest factor of being closed down due to the pandemic and virus, that this has just been really rock solid and showing really strong signs of continue printing higher, with the 5 and the 8 exponential moving average, with a 21 super nicely stacked and just a beautiful straight line up the last 2 or 3 weeks here, with the 5 exponential moving average kind of pushing things higher, indicating a very momentum driven stock here. Again, this is a huge industry. This is $1 trillion market cap company, and it's very levered to a lot of ETFs. So this, once this thing moves up or down, it kind of takes the tide of the market with it. So looking at this, potentially looking for a test around 326. And then we're going to kind of keep it on a very short leash. If you're trading it, it's going to be around 302, and then another support level is going to be around the 290 level. If you haven't got into it yet, the 21 in the short term has been a nice point of resistance as well for support once it kind of comes off. But again, this is going to be highly levered to the overall market and so forth. So let's go ahead and jump into some other stocks. And then Tesla, that has been in the news without a doubt. Everything from Elon having another child, congrats, him saying his stock price is too high, that sucked, and then him just saying basically he's leaving California if the government doesn't let him open up his factory. So that's kind of sucks for multiple people with the workers and things like that, and of course things like that. But that being said, the stock price is not really reflecting that. Basically down very minimal here, basically 0.1%. 0.5% here, still above the 5 and the 8 exponential moving average. This is kind of going again with the overall trend of the market. With the S&P 500, we're seeing a little bit more stagnant and just kind of hovering around the 292 level, 291 level for a potential kick higher. But again, once things are opening up due to the pandemic, I think we could see some higher prices in these stocks. Initial lower band resistance, we're going to move in this up here. So support down around $736. Again, it starts one of these, the 5 and the 8 start crossing in, coming down to the 21. That could be a potential for the 21 to hold. You can kind of see the 21 held here, and in the short term, ever since the quarter, even before the quarter, the 8 exponential moving average has been coming in quite a bit as well there for support. Everything on here on the daily chart is indicating for potential higher prices. Chaikin money flows pretty evenly stacked. RSI is nicely stacked. Momentum is looking like it's trying to spool up. You can kind of see this here with a traditional, lack of a better words, a wedge pattern. I don't usually like to say those words, but looking at this kind of coming into this wedge, potentially trying to break out to the upper band side of that. Again, just be mindful of that. I usually don't like to draw lines on my charts, things like that. More or less kind of letting the price dictate of what I see. But this could be a potential trying to break higher once these parabolic SARs switch over to the bottom. So that is basically Tesla in a nutshell. Then we're going to go to Beyond Meat. So this has been in the news quite a bit too, on the fact of Tyson's factories being shut down due to people testing positive for the virus and things like that. And that is a huge damper on their production, multiple shortages in chicken, beef, and things like that. So the CEO and the company at Beyond Meat have been going out and cutting their prices of their products. So their products are meat free, animal free, made in the lab or whatever they're made from, and they're basically lowering their prices to kind of incentivize consumers to try it. And they had a fantastic quarter, and they've been flying quite high. This did come up a lot in our live stream last night. Again, it's been flying really high in the sense of the standard deviations. So here on the daily chart, we're seeing it kind of pop out of the standard deviation of the red one being 3, and usually that happens after a big move or a quarter. But normally after like a week or so, it could ride up the 3 deviation channel for some time, but then it kind of starts trading sideways and kind of waits for the moving averages to kind of catch up. So like I kind of see this happening, so I kind of have some tight lines on it at 143 and 122. excuse me, for a potential kind of just trading up a little bit and then trading sideways, kind of waiting for those moving averages to kind of level off and come up to give it another kiss for another potential kick higher. Then we're going to do SQ. So they actually recently reported as well. I don't know. Was corrected by a lot of our very smart, intelligent viewers on our live stream last night. I always thought Square's business model is more of just the card processing for a lot of small businesses, but they actually do a lot of other measures within cryptos and other various business ventures. So they're kind of like more in tune with a lot of newer age payments of things. So that's kind of the cool, fun thing. It is trying to break above the 78.6 percentile move here on the fib retracement. This is a very positive sign, but again, since it had a pretty big move on earnings, we kind of want to see this kind of level off just slightly. This could be trading around the 75 level potentially, to try to get some energy, wait for these moving averages to kind of catch up and see if they can go back and try the 86, 87 level at all-time highs. And then the overall support basically being around 65 if selling off with the overall market or anything kind of bad news to see a potential bounce. Next, we're going to have Facebook. That's FB. And again, they had a pretty strong quarter as well, reporting having a huge gap up. This looks a lot like just a lot of the charts we just recently looked at. A V-shaped bottom, if you ever seen it, and just kind of been riding up the 5 exponential moving average. This is somewhat concerning due to the fact of this has been riding up the 5 just so much, being a very momentum-driven stock for what kind of market we're looking at here. The thing is like this doesn't last forever. It can last for a while, but potentially running out of steam when it hits 217, basically up here 217 to 220 potentially. This is going to be some pretty key markers up there, and again, support's going to be kind of fairly low around 195, and then potentially here at the 200 at 188, or just call it 190, lack of a better words, for support if things kind of start falling apart and the wheels start giving out. And then that's completely normal for stocks to kind of not fall out of the sky, but slowly come down, kind of test things, and then bounce higher. That's what makes a market. So next we're going to have Starbucks as SBUX. So again, Starbucks, again, due to the overall pandemic, is doing fairly well, in lack of a better words. I'm going to see how things move forward. It's still having some overhead resistance here at the 200 day exponential moving average here. So that's basically around the $80 level. The moving averages are neatly stacked, but showing some kind of tight, woundy, range-bound trading. So basically, just the last 3 to 4 weeks, been trading anywhere from 70 and to 78, call it 80, for lack of better words. So $78 to $70 in that $8 range for some time, and looking to see if it's able to break out of that channel, potentially to test and break above the 200, or if things go sour, to kind of see once it starts breaking below 74 and the moving averages cross into the 21, potentially seeing lower prices, and that's going to be around the 68 or 65 level here. Just be ready for everything. Again, no crystal ball on the market, just have to kind of sit on your hands and wait to see what the market gives you. Twitter, kind of the same thing in the sense of it's well below its 200-day moving average here. Not really the kind of chart I like to trade potentially. It is trying to rebound here. You're seeing these higher lows here, which is a good sign of a potential trying to climb out of the hole it's currently in. But it's not performing as well as its competitors are. A lot of their competitors are above the 200 exponential moving average and going higher. This is somewhat lagging, which could be a sign of a potential more of a push higher. I wanted to kind of look this at more of a long-term chart. On a monthly chart, this is kind of indicating actually somewhat lower. This is a lack of a better words, potentially getting up to the 31, 32 price target with the overall market, and then potentially selling off more, because there's a lot of momentum that is signaling lower, with the RSI not really moving up in the last couple months. Again, this is a monthly chart we're looking at, so this is since 2014, and you're seeing the chart here. It's kind of been not the world's greatest investment. They don't pay a dividend. It's been kind of flat, so this could be a surprise for a lot of people, but Twitter has just been kind of flat for a long time compared to its competitors. Next, we're going to do DIS, D-I-S, that's Disney, Walt Disney Company. Looking here, we did quite a bit of analysis on this guy. This has been under fire due to the fact of their cruise lines being shut down. Their parks are basically are closed. They're opening up now just this week, I believe, Shanghai, with a lot of restrictions of not only allowing capacity to certain levels and things like that. So the initial pictures that I saw at Shanghai seemed really crowded, honestly, but everyone was wearing a mask though. That being said, Disney had a huge sell-off again because of the unknown due to the virus, and then now cutting its dividend for this year, and then looking at potentially consolidating some cost, kind of restructuring a lot of debt, getting debt at a very low level potentially, and able to use that capital as needed. So once we get the all clear and things kind of start ramping back up, Disney's able to get in on board and get on these gains. Basically, Disney Plus has been pretty much a lifesaver for them here. Again, you can kind of see the 21 being very attractive here, kind of failing here multiple times, but then kind of breaking above it here. So if you're not in this yet, like the 103 level would be a nice starter position. If it gets back down to that, it could go back down to 100 or even lower. Again, with the overall market and whatever happens with phase 1 or 2 fails, and people have to kind of do self-quarantine again, but we'll see what goes on from there. But looking at, again, long-term holder here, we're looking for higher prices again, with the basically 102 to 100 price target holding for a potential kick higher to all-time highs. Again, it's going to be a slow grinder due to a lot of news that's going to be out there. All right, so we got two more for you here. We're going to do BA, which is going to be kind of under fire. We kind of did a great little analysis on this. A lot of people asked here in the live stream. Basically, you can kind of see the picture here. It's not breaking above the 21. So it's kind of a hard buy, and breaks and closes above the 21. I know this looks really attractive. It used to be a $400 stock. Now it's $130. This must be, they're gonna just flip the switch and everything's gonna go back. Lack of better words, I don't think so. This has just been beat down so bad. They did get some very cheap debt within the market, being able to capitalize and retain somewhat of a healthy balance sheet through this process, and looking for some higher prices, but needs to kind of break about this 21 exponential moving average, which would be around the 138, 140 level. So $8 to $10 higher from here. It is still somewhat kind of looking negative and bleak due to the overall airline business. Again, it's only about 48% of their business is commercial airlines. The rest is a lot of military based, so be mindful of that too as well. Next is going to be JP Morgan, last one, and this is basically a bank stock. Not a big fan here as well with the bank stocks. This kind of looks like a short potential for me, honestly. It's down 3% today, pretty strong, with it having a lot of issues again on the 21. The 8 is through the 21 here and kind of certainly printing lower. The Chaikin money flow it's super negative. The momentum is curling off. RSI is trying to curl down, and there could be a squeeze until the RSI just start printing negative. I'm sorry, the parabolic SAR starting to print negative, so this could be seeing some lower prices, initial price targets basically going to be around $87 and then $83. If it wants to get higher, it's got to break above the 93 level and potentially test the 95 level. Again, guys, thank you so much for watching. Don't forget to like and subscribe. If you want to help support the channel, I have a Patreon link down below. We're going to be doing some fun stuff there, kind of doing some interactive stuff, sharing charts, talking about stocks and things like that. I really do appreciate everyone watching. Don't forget to hit the like and subscribe if you improve and learn today. Again, this is Ken from the Dyslexic Investor, and I'll catch you guys on the flip side. Peace.